The Nasdaq 100 has been choppy this week, with price bouncing around between 11k and 11,180. It's been a split week this week, with the first half of the week focused on earnings, and then after Tesla had reported, the focus had shifted back to yields again. You can see in this chart the 10-year and the Nasdaq 100 breaking the inverse correlation, and that's because the focus has shifted towards earnings. Price ended last week right near the lows, closing below the 10,730 support area, which saw price gap down marginally overnight on Sunday, only to squeeze higher on Monday as Bank of America beat on earnings, with the bank CEO providing a confidence booster stating the US consumer remains in a healthy position. Tuesday was followed up with Goldman Sachs, the last major bank to report, which also beat on earnings. But Goldman CEO was much more downbeat, saying that he was not as optimistic about the future and stating it's time to be cautious. Amazon chief Jeff Bezos followed this up, also warning on the economy. I mentioned in my last video how you're going to see more of this more often, with influential leaders of big corporates coming out warning about the economy or the impact higher rates might have on the economy, as they signal and put pressure on the Fed to ease off the aggressive rate hikes. Now going back to the charts, on Tuesday you see price retesting 11,180 and staying above after closing above this level the day before. Price reversed sharply on Wednesday, closing back below the 11,180 level, and whilst the media put that down to a sharp rise in the 10-year, what is more evident is the strength of the US dollar, which is impacting US stocks. This chart shows the inverse relationship between the US dollar index and the Nasdaq 100. You can see here as the dollar rallied on Wednesday, the Nasdaq 100 began to come off. You can see the same pattern playing out on Thursday. As the dollar rallies, the Nasdaq 100 comes off. The dollar strengthening to abnormal levels, and it's approaching levels not seen since 2001 and 2002, will hurt company earnings going forward because large companies export goods and services outside of the US, so a strong dollar will hurt overseas demand. The 10-year yield is hitting levels not seen since 2008, with Fed officials continuing rate hike talk. And it's the same problem in Germany, with the 10-year Bund hitting levels not seen since 2011. Rates are rising globally, and that will continue to hurt equities while the dollar continues to catch a bid. If we look at the weekly chart, we can see price backtesting the 200-week moving average around 11,246. As long as price remains below that, it is hard to get bullish on the Nasdaq 100. Getting above that in the short term is critical for any rally to be sustainable. In terms of the immediate levels to watch into the close and into next week, 11,180 remains the upside level. We've yet to see price close above and stay above. Above 11,180 is 11,246, being the 200-week moving average, followed by 11,480. On the downside, 11k will act as immediate support, followed by 10,730. More big tech earnings next week, with the likes of Apple, Amazon, Microsoft, Facebook, and Google reporting next week, so that will be the driver. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.